Aloha, YouTube investors. How is everybody doing today? My name is David Jansen. Welcome to my channel. Today is February 2nd. It is Tuesday, 2021. It is Groundhog's Day. I just did a video on Google's earnings that they just posted. Really great numbers. You can check that video out if you like after this one. So in this video, we're going to do Amazon. Quick summary stock analysis of Amazon and their quarterly earnings that they just reported, and some big news for the company, some changes at the top, and then at the end of the video, towards the end of the video, I'll tell you the one thing that can kind of stop Amazon, which is kind of the same thing that can slow down Google and Facebook, like I mentioned in those videos previously as well. But first, subscribe to the channel if you haven't already. Mahalo, thank you to everybody who has already subscribed, continues to follow my channel, and likes my videos. There's a thumbs up button there for you to hit the like button. And also feel free to share with your family and friends. And remember, I'm not a financial advisor. I'm not an economist or an accountant, so please do your own research. Don't take my word for it. Somebody on Reddit or YouTube, someplace else like that. Just do your own research and try and pick out the holdings that best suit your investment strategy. And remember, investing is risky. There is always loss with any investment that you take. I feel fortunate that I started investing in 2019, the summer of 2019. I started this Roth IRA that you see right here with M1 Finance in September of 2019. And originally I had an individual account with M1 Finance, but then moved that account over to Fidelity. But my Roth IRA, this isn't the best numbers as far as my returns are concerned. It's great. I feel like I'm pleasantly surprised at how well things have performed as a new investor for myself. And I think it's just the companies that I have that I'm investing in. They're just really strong companies in my Roth IRA. But at one time, my total return was about 28%, and my total gains was a little over $1,000 with my earned dividends being included there. So with my earned dividends included, you can see I'm at 9,992. Hopefully, I can get over the 1,000 mark by the end of the week and stay there by the end of the week. And these are the all-time numbers. As you can see, my little bit of cash balances from some companies that just paid their dividends in the middle of January, and then I'll have a couple that'll pay at the end of this month. I did have AT&T and Verizon, and I think Lockheed Martin paid dividends today in my Fidelity account. But anyway, here are the 3 ETFs that I have with my M1 Finance, and then my different slices there. You can check out my video, which I'll post up here at around the 3-minute mark. Link card up here for you to see how my M1 Finance performed in 2020. And then you can also see my Robinhood, how it performed in 2020. I'll have a link pop up there for you as well too. And then here is my Fidelity account. I did move this account out of M1 Finance, like I mentioned. It sets at about getting closer to $8,000. I haven't reached $8,000 yet with this one. All-time gains with this. Fidelity doesn't do year return, quarterly return, monthly return. They just basically have these 2 rows right here. You've got today's gains and total gains and losses. And so today's gains over 1%, and then total gains over 8.5%. And I did add to some of these companies, or one of these companies today, I believe. It wasn't today, yesterday I added to Verizon. So as it's trading a little bit lower, that's kind of my strategy, is when the stock dips, I pretty much buy low. So Amazon sits in my Robinhood portfolio. This is my growth portfolio, so not a lot of companies that pay dividends in this one, even though I did add Activision Blizzard, and Electronic Arts. Electronic Arts for the first time announced to pay a dividend. But originally that was not my plan for investing in them. Activision Blizzard, I still have the same plan. I don't plan on keeping these 2 long term. I know the gaming industry is a $200 billion industry, and I have a video talking about the 3 gaming stocks that I own, but I just don't plan on holding on to them very long term. And I did I have been adding to Pfizer as it's been dropping. But Amazon, you can see right here, I don't own a lot of this company, and I don't do a lot with this portfolio, even though my total returns are pretty good with this portfolio. because I'm more, I'm a new investor. I'm under 2 years, and I'm still trying to build out my positions with my core stocks. So that's a lot of my Roth IRA. My Roth IRA, all of last year, and will be the same thing for 2021, got the majority of my investing money. So just because I want to hit that $6,000 cap every single year because of the tax advantages when you withdraw at retirement age. So Amazon, like I said, I own very, very little of this company. You can see here it's not even a half of a share. Average share cost over $2,500. So my gains is pretty good, almost 34% in gains. Today's gains was 1.5%. The stock, I believe, went up. Yeah, it did go up in after hours as well too. After they reported their earnings, which we're going to look at here, and this is a beast of a company. So the only reason why I really don't own more of Amazon is because they don't pay a dividend. So on Seeking Alpha here, you can see no dividend yield that they're paying. They are investing everything into the growth of the company. 1 year return, 66%, over 66%, according to Seeking Alpha. If you were so lucky to get into this company even 10 years ago, your total return would be over 1,800%. So growth investors, this is a great company for you. But like I said, do your own research because I'm not a financial advisor. But please subscribe to the channel and also like the video as well too. If you give the thumbs up there and share with your family and friends, I really appreciate it. So looking at their numbers here, this is from Alpha Street. They put together this nice graph for us basically to look at. So I do this for a lot of my videos here. So Amazon, this is Q4 2020. They announced, like I said, at the end of the trading day for February 2nd. And it is Groundhog Day, by the way, so it looks like we're going to get 6 more weeks of winter. But the numbers were amazing, as always. Amazon always has really great returns, always has really great numbers. The stay-at-home economy of 2020 really benefited them, and a lot of these numbers, I believe the CFO was saying, is attributed to the holiday season. Amazon just took off. I think, like I showed you, 2,500 is when I got in. They were sitting below 2,500 at about 2,200 or so, and then everybody just started buying everything online. Lysol, Clorox wipes, batteries, toilet paper, everything started going online. So e-commerce just doubled and tripled for some businesses online. You've got your DoorDash who went public, Instacart's looking to go public, Target owns Shipt, the grocery delivery online app company, and Amazon really, really benefited from the stay-at-home economy. And so the benefits that you get with Amazon, besides the fact, not talking about the stock, but just what you get from the business, because I'm assuming you guys all know about Jeff Bezos and Amazon and stuff like that, is that if you sign up for the service, which is $100 a year, you get free Amazon Prime movies and their original content there. You also get free 2-day shipping, which I'm here in Hawaii, so we don't really ever get 2-day shipping. But it's possible to come. There was news last year that Amazon is starting to look to open offices here. So, and then you also get now, which they announced in November, Amazon is going into the pharmacy sector. So you can get discounts on generic drugs like 80%, and then non-generic drugs, it's like a 40% discount. So, and it'll be shipped to your house. So you either fulfill the prescription yourself, get my words out, or you have it done by your doctor, and they have it sent to your house. So, but for the first time in a quarter, Jeff Bezos and Amazon hit a record $100 billion in net sales for this quarter, 2020. Sorry, I don't know what's the matter with my throat. So they hit this record. They beat it by $125 billion. Their net sales, $125.6 billion. That grew 44% is the gains there. They always have really, really good numbers. Amazon does, and you're not to think that there would be anything different right now. Net income up 100%, over $7 billion, and then operating income as well grew 76%. That is amazing. And like I said, the stay-at-home economy pandemic really, really helped this company, as a lot of people didn't want to go out. A lot of stores were closed, with the exception of your essential grocery stores, places like that. And a lot of those places had products that were sold out. And so if you want to stay away from people, if you want to social distance, then you buy everything online. So operating income huge, almost $7 billion, gain of 76%. These numbers are kind of unheard of for a lot of companies. Tech companies, they do have big numbers, but Amazon's established, you know what I mean? So it really, I'm not saying that they wouldn't have grown this much and reached this $100 billion net sales record if there wasn't the stay-at-home economy, but chances are it might not have been this big. Maybe they would have hit the 100 billion. It might not have been 125 billion. But like I said, they are attributing a lot to Christmas shopping as well too. What few people were able to go to malls and stores, you're waiting in lines for a long time to get in and out. So buy it online. And I send all my nieces and nephews everything via Amazon, because they live on the U.S. mainland. I live here in Hawaii. So North America sales grew, international sales grew, Amazon Web Services sales grew, which is really their darling, their baby, up 28% with the web services, almost $13 billion. And of course, North America is the largest area that they make their most money, over $75 billion. So for quarter one, 2021, they are saying that they are expecting still good net sales of over 100 billion and operating income to be up there as well too. But in the article that I read on CNBC, they were kind of like, well, it might be kind of tough to beat these numbers. Is kind of the take that I got from reading the article. But it's still going to be in the billions. It's Amazon. So here you can see their key business metrics, net sales and operating income, and this goes quarter by quarter. So operating income in 2020 versus operating income for quarter four of 2019 went from 2.6 billion up to 3.5 billion, and huge growth as well too for quarter four in net sales versus quarter four of 2019. It went from almost $10 billion to almost 13 billion at 12.7 billion, like I mentioned. So, and then you can see their online sales, third-party sellers, that people that sell on their websites. I had a friend who sold some stuff on Amazon for a little while. Their subscription services grew 35%. Again, if you weren't subscribed to Amazon before everything went on lockdown, you picked it up really quickly, because it's really not bad. $100 one-time fee, 2-day delivery, and then you get you don't have anything else to do but to binge TV shows and stuff, so you get Amazon's original content with that. Shipping costs obviously grew, up 67%, because more people were ordering. Operating expenses were down 42%, which is nice, and then they do have this long-term debt of almost $32 billion, but it's not really that big a deal, not just because a lot of companies do carry debt, and most do, but personally, when I look at a company to invest in and I don't necessarily look at what their total debt is, but I look to see what their cash flow is, because if their cash flow is growing on a regular basis, quarterly and annually, then the debt can be wiped out relatively easy. So if for some reason, and I said this in the Google video, if the debtors came to them and said, Bezos, hey, knocking on his door, and said, we need this $32 billion right now, he would look over and say, okay, I've got operating cash flow of $66 billion, and I've got cash equivalents of $42 billion, and he could easily wipe out this $31.8 billion. So, of course, that doesn't happen. A lot of companies just keep refinancing the debt, especially when interest rates are really low. But if they do have any that are due, they'll pay them on time, but some other companies, they just keep refinancing and stuff. So the big news, of course, which you probably heard about already, is Jeff Bezos is stepping down as CEO, and his longtime, not partner, but business partner, they're probably really, really good friends. Yassy, I believe, John Yassy. I'm probably messing that up. Let me look it up here really quick here while I've got you guys. Amazon. Okay, I was looking up the earnings earlier. Andy Jassy. Jassy, maybe. He was the Amazon Web Services CEO and basically got the thing to where it is today. So he will be taking over as CEO. Of course, Jeff Bezos is not leaving the company. He's just taking on another role. I think it's executive president, executive vice chairman, or something like that. And he says he wants to focus more on like his space projects and some other projects that he's got going on and stuff like that. So not entirely leaving the company, just stepping away for a little while. So anyway, please subscribe to the channel if you haven't already. Mahalo to everybody else. I hope you have a great day. Mahalo and aloha.